No surprises there. VIX is up 3% here, a little bit higher ahead of the Fed meeting. You've got gold flat on the day, most commodities slightly in the red. Bitcoin up 1.5%, 106,000. My goodness. Dollar index chopping around here, but still higher from that 106 level. Got some strength in the dollar front. Again, no surprises there. Currency pairs have been getting beat up and whacked by the dollar for the last few months. Really, really interesting story there. Anyways, guys, show continues with Chris Pulver just after this quick break. Check it out.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
What's happening, everybody? How we doing? Happy Monday. I am just going to try to flip things around. Give me 1 second. Close. It's not closing at 65. I'll try to 65 real quick. Not filling at 65. Let's try it at 70. Filled at 70. All right. Taking a quick gain on SPX. Let me do a quick update and let's get into the charts. Lots to digest. Soaked up a bunch of content, macro stuff this weekend. I know I had a couple of public service announcements last week in these sessions. I wanted to kind of continue on that without it sounding so negative. But look, I've got a trade in. I'll put it in Pulver alerts. I'm putting on a hedge on the QQQ. Closing for profit at 0.70. All right. Also, Bitcoin is up and BITO is up. I took some profit on this one. I was into some $14 calls for $5 each. I closed out for 13 bucks today. So 13 minus the 5, 160% gains on BITO calls. I'm taking the profit now just because we're getting into a spot where, look, I'm as excited about Bitcoin as everybody else. But I'm also a trader. And so it's not a forever trade for me when it's coming to some of the option trades that I'm in. And so when, my my BITO looks like this, if anyone's familiar with options and time decay, time is your enemy when it comes to long options. And so this is what a typical options theta decay looks like. Now, my BITO was in enough time that I didn't really have any type of time decay working against me. So because time didn't work against me and price has been appreciating nicely since the election, I get a lot of extra juice to those call options. So my deltas are up, my gammas are up. I'm getting more and more. I mean, I'm trying to think when I close it out, a $14 call on BITO might be trading at like a 90 delta right now. Let me find out. So I go BITO and it was a 14 delta. So 14 delta is a 98 delta. It's a 98 delta. So I'm sorry, $14 strike is a 98 delta. That means that for every dollar this asset goes up, I'm getting 98 cents increase in my option. So that's about as good as it gets. And I realize, like, yeah, this could go higher, but I look at Bitcoin right here near an asymmetry level. And if I'm up, let's say what, $13 minus 5 is up 8 times 2 contracts each. So 16. So I was up roughly $1,600 on 9 accounts. So there's 14.4 in gains. The reason I'm going to take some profit on this is I'm going to take those gains, keep those gains, and I'm going to allocate that into more with IBIT, more with FBTC, more with MicroStrategy as it's getting passed into the Nasdaq. But my outlook on Bitcoin just in the near term technically is that we have a symmetry level, and similar to what I see with currencies, crypto responds really nicely to technical waves, to structure, and I think that Bitcoin in this kind of 107 to kind of 110 zone is likely going to create a profit-taking zone, or at least have a pullback. So we could also look at overbought conditions. We could look at everything, crazy stuff like mutual funds, ETFs, levered ETFs, single stock levered instruments like your double X MicroStrategy or double X Mag 7 or double X. I mean, I don't even know. There's so many of them. It's like I don't touch the leverage stuff because they're all priced out to not be long-term holds. But it's crazy to think it's like MicroStrategy is up 100+% for the year, and people are like, I want to have 2 times that. And what else? Like, isn't there like an ETF that's like leverage Nvidia, where Nvidia was up 100+% for the year, and it's like it's not good enough. I want to double that. So anyway, people are long, and when I say people, I mean like retail investors. When everyone's come in, post-election, everyone's all excited. We're getting these like big juiced gains. The Fed is likely going to be cutting rates this week on Wednesday. I think it's going to be a bit of a neutral to hawkish cut, just because we do have core PCE this week as well. And it doesn't show a forecast here on the Bloomberg economic calendar, but I want to say that we had CPI print hotter and inflation is warming up. But I saw the numbers this week. The core PCE year over year, which doesn't have a forecast, but we had a previous at 2.8. I read this weekend that we're looking at a Fed projection of 2.89. So this is either like the Atlanta Fed or the Philly Fed or the New York Fed or whatever. But 2.89 is the projected year over year. Again, showing that this is the Fed. And again, I don't think the Fed is this dumb, but the Fed is like, okay, we're going to cut rates down to 4.25%. Okay. So they cut to 4.25 and they look at core PC and they're like, well, PC is at 2.89. We still got lots of room to be, less than restrictive. I don't think they're that stupid, because if they're seeing that inflation is now 3 prints going up, we bottomed out on CPI, we bottomed out on PPI. If we're bottoming out here on PCE and core PCE, and they're trending now with multiple data points trending higher, this is why I think it's going to be more of a neutral to hawkish cut this week. Now, does that top the market? Not necessarily. They might say very little to disrupt the trend. We might see another 58th, 59th, or 60th all-time high going into Christmas and New Year's when the market is just in permanent like holiday drift mode. The Santa rally, also from Christmas, like that week of Christmas into New Year's, that's considered the 2-week Santa rally. Performance-wise, that's usually up like 1 to 2%. So we could still get higher highs by the end of the year, which if that's the case, that's fine. I am still taking some hedges and stabs at hedges with SPY and the QQQ. So in the Pulver section, I'm going to add this in right now. I put in a trade on QQQ. And we don't necessarily have a huge bar count because we did hit the 200 moving average during that August 5th bottom. So that July top, August bottom. But the Nasdaq is the one index that is now like the front runner of performers because the S&P hasn't made a new high since this almost is going on 2 weeks now. So we haven't made a high since December 6th. So that is 10 calendar days ago. The Nasdaq continues to make 1, 2, 3, 3 all-time highs the last 4 trading days. And I would say 1, 2, 3, 4 out of the last 6. So 4 out of the last 6 days on the Nasdaq, we've made new all-time highs. We are getting a bit stretched away from even the more aggressive like 21 moving average. But I'm always looking at the measurement away from the 200. So that's a little off. Let me go here. We're about a 12% extended move, which again isn't necessarily like, oh my gosh, we need to crash. That's not what I'm saying. But when we came up into this bar count, plus we had this move, we were around 15%. So could I see us going a little bit higher? Yeah, a little bit higher, maybe into this like 15% extension. So if we're 15% above the 200 moving average, like we were back in July, I could see the market pausing there. And, the one thing that price action has to do is tell us. And if price isn't turning over, if price isn't putting in some type of really, obvious like red flag candle where it's like some massive daily or weekly candle to kind of shock price for a moment, then it might not happen. But at some point when this happens, This is when all the hedge prices start to go higher, right? Like right now, it's very cheap to hedge, and I'm okay hedging. So point is, I'm taking a stab at this one. I'm doing a 131 expiration, and I bought a 533. So 533 buy put and a 510 sell put, and I paid 585 debit for that trade. So that's what I'm putting in the Pulver alerts. Essentially, it's this: I'm paying 585 for the trade for an upside of $23. Okay. So if I take $23 out of this trade, let's say we go back down to 510, I get $23 credit minus the 585. I get 1750 per contract if I'm in 100 shares. That's a $1,700 profit for something that cost me less than $6. So that's about what I'm looking at for like the SPY, the QQQ, something that's going to pay, 3-to-1, 2.5-to-1, 4-to-1, 5-to-1. What pays even more is like way out of the money, long puts. But they also are like a waste of money because price has to move very fast, very aggressively. We almost have to have like just like a giant like delta gamma squeeze, and that can happen. But that's like the trade that you put on that you pay 10 cents for a long put and it pays you $1 credit. So you get like a 9x profit, which is awesome, but that's also few and far between because your probability is extremely low. You're talking about maybe like a 1 to 3% chance of that trade paying you, you know. So anyway, that's the trade that I'm in. I'm gonna take a screenshot of that, I'll post that in Pulver alerts. And it's just a hedge. If you don't feel compelled to hedge portfolio, then don't take the trade. Okay. But as I've said before, this is something that I have to do for managing accounts. It is silly for me to not have some protection in on any type of downturn. So I do. I'm taking profit on BITO so I can take that 14 to 15K and allocate it elsewhere. Where to? I'm probably going to wait. IBIT is pushing to some fresh highs. I've got some good profits running on both. So BITO right now is up, almost 30 grand year to date. I've got open positions around $5,000. That's all with naked puts or cash secured puts because I was going to take on more shares, but now I don't have to. And those puts I've got some shares of it. I also have, I closed out all these trades this morning. So my 23s, 27 calls, my 14 calls. I have the 2016 and 15 all cash secured puts that are looking to close out for some profit over the next couple of weeks and going into end of December and monthly expiration in January for some profit. So that'll be a nice little chunk for another like $4,800. IBIT doing pretty well. This is up almost 50 grand. And is it a spot that I want to take some profit? Probably, right? Some cash secured. What are these? Credit spreads 52 by 51. Those are looking pretty good. 52 by 51. I mean, I've got credit spreads out to next year. I've got some shares. I've got a lot of profit on IBIT. And this is my symmetry level. Now, I've got this one measured out. So if Bitcoin hits 100K, measure moves 107, right? Are we close to that? Take a look at my chart here. So Bitcoin, if we hit 107, okay, here's my IBIT. I just did the percentages and we're pretty close. I mean, I could see us hitting like 60, 61 and change on IBIT. We hit that 107 to 110 area on Bitcoin and pull back. I could see IBIT pulling back as well. Right. So anyway, I like to trade in Bitcoin. I'm going to take some profit on BITO because that was a call option. I'm trading a little bit more kind of traditional options with IBIT. I have some shares. I have some credit spreads, and I'm just using them for income trades. But if we get a pullback, that's fine. I said on Bitcoin, if we get a pullback towards 90 to 80K, I'm looking to add some more exposure to that. I also think that, just doing some reading this weekend, I wouldn't be surprised if coming into the new year that it's kind of, it's an aggressive agenda for the U.S. government, or at least, and nobody knows that this is going to happen. So let's talk about, the probability of Trump can say that we want to have this, we want to lead AI and we want to lead crypto and we want to be blah, blah, blah. The guy speaks in hyperboles, right? I mean, everything is like the greatest and biggest and blah, 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 best, whatever. So he can say whatever he wants, but can he actually make it happen? Let me read what would be required if we had to get a strategic reserve in Bitcoin, here's what has to happen. Okay. It would involve navigating legal, economic, and political challenges. So, right there, just that alone in the US government, is that going to be an easy task? No. So, legal justification, we'd have to go back and you're going to have to take into effect, okay, we've got the Gold Reserve Act that happened back in 1934. You'd have to be declaring Bitcoin as a strategic asset critical to the national interest. Um, this would also be something that's directing the Fed or the Treasury to establish and manage a reserve. I mean, there's a lot of bureaucracy going on to even consider that. So saying it is one thing, doing it is another. Okay. Establishing a custodian, acquisition of Bitcoin, regulatory framework, strategic goals, and on and on and on. Like it would not be an easy thing just to do it, right? To say it is one thing, but to do it's another. But my point is this: if we want to celebrate, crypto, or look at it like, okay, now we can say, okay, stock market's at all-time highs and Bitcoin's at all-time highs. Look at how great everything is. I almost think like there's kind of two stock markets now. You've got the spot price in Bitcoin, and you have the spot price in your Nasdaq and your S&P, right? So by those three benchmarks, if you will, it's giving everyday investors a chance to look and see, if I'm invested, are my investments doing well? Because if Bitcoin's higher, great. If the S&P's higher, great. If the Nasdaq is higher, great. Those three are now, to me, the new benchmarks. Okay. Now we're sitting in areas where, sentiment wise, everyone is pretty darn bullish. Goldman Sachs released this. I've got a screenshot of this. I'm going to try to. I'm going to do a live session today at 3 p.m. Eastern time on my YouTube channel, and I'm going to share some of these images. But let me see. One of these was kind of nuts. It was from a podcast that I like. Here it is. So Goldman released a positioning and sentiment survey and just showed where things are at. So right now it's basically a risk on, risk off sentiment survey, and this goes back to 2007 to present. So we're creeping up on like 20 years of sentiment here. Um, and right now we are sitting at some pretty high levels where virtually 6 out of 15 metrics are all pegged at 100%. Like the 100th percentile is as bullish as you can get. And we have risky bond flows at the 100th percentile, U.S. equity CFTC futures positions at the 100th percentile, global equity flow at the 100th percentile, global equity flows 100th percentile, bull versus bears 100. Actually, bull versus bears around the 90th percentile. Safe bonds and safe haven bonds like 0 to 10%, 0 to 10th percentile. So basically, nobody wants safe haven. Everybody wants risk. And if the boat is leaning towards one side, usually that means it's getting a little top heavy, right? And so again, it's not changing until price changes it. And right now, price isn't changing anything. So the SPY hasn't, it hasn't toppled over yet. The Nasdaq's still making all-time highs, but the difference in performance between market cap weighted versus equal weighted, night and day. Market cap weighted is way up here near the highs. That would be your SPY, right? So lingering about these all-time highs. Equal weighted has had one of the worst stretches ever. Like over like a 20 or 30 year period, we've never seen 10 consecutive days in a row. And I know somebody made a joke about that, like, oh my gosh, I'm glad I survived that historical sell-off. I mean, it sold off 3%, but it was 10 consecutive days, which is very uncommon. I still have some positions in RSP. I dollar cost average into this one around the 177.20 mark. Take a look at the QQQE also. Look at the Qs. 4 out of the last 6 trading days, all-time highs, equal weighted NASDAQ, not even close, right? So we are led by Mag 7 flows right now. And is that going to take us to the promised land? Sure. Until it doesn't, So am I short Mag 7? Of course not. That'd be crazy. I'm trying to think what oh my gosh. Are you kidding me? There's a 5x long Mag 7. That is I don't know if that's Well, I don't know what country that is. That's crazy. So there's a Mag 7 single leverage. That's QQQD. You have a double leverage QQQU. Again, I wouldn't touch that with your money. All right, here we go. YMAG. Maybe that was one I was looking at this weekend. I mean, look at this. Are you short this one? This has to be short. This has to be a short one. So if you're long this, you're short the Mag 7. I'm assuming that's what it is. So let me go YMAG and see what this looks like. No, this one isn't it. Hang on a second. There is a ticker for it. Let me see if I can find it. MAGS, that's what it is. MAGS. There it is. So there's your Mag 7. Now again, it's like we have ETFs for everything, and that makes it pretty easy to invest. But anyway, here's another just this goes you could find 100 stocks easily that look just like this. They're just getting stretched away from the 200 moving average, and it's the percentages away. It's not so much the bar count. In this example, it's not really the bar count because that August 5th bottom did find the 200 moving average, but it's the percent that I'm getting a little bit concerned with. That percent was around 24%, and we found the 200 moving average. Now our percentage is around 21.5, 21.6. So it's getting a little high. I would think, and again, I'll make a little projection here. I would think that the upside right now in the market is, I'll say this, we will probably see less than 10% upside before we see 5 to 10% downside. Now, I could completely eat those words, and I'll be the first one to take accountability for saying something like this, but I don't think we're going to get double-digit more gains before we see some type of hiccup in the market. 3%, 5%, 7%. Give me the grace to say that if we get a 5 to 10% downside, I can check that box. But if we don't see double-digit upside, I would say that we're looking at a melt up in single digits, maybe a 1 to 3% melt up through the holidays, melt up from Christmas, New Year's into the first part of January before reality sets in. But it could be as simple as this: a forced rebalancing of portfolios, a reallocation of profits and those that have been, taking their momentum stocks and performing really well, and then reweighting the portfolio back to a, 10% Mag 7 and 10% whatever, doesn't matter. Whatever it is, like whatever's running hot this year, being rebalanced is going to force profit taking, and that could be enough to at least disrupt the flows we've seen. But I'm just going to say I would be doubtful that we see 10% more upside on the SPY before we see like a 3, 5, 7% or even a 10% downside. Okay, so if I'll do it. I'll mark it right now and just make a note. We'll have some fun talking about this. But right now we're at 606. Okay, so what's 10% higher? It's going to be way up there, right? 10% higher gets us up to around 667. 667, 10% gain from December 16. So let me make a note. Horizontal ray, 667. Right in that area. So I'll drag this up here, and it's out of the way and nobody's paying attention to it. But I doubt we're getting there before we have some type of pullback into the moving averages. So a 50 EMA, 100 EMA, something in that ballpark to at least get some buyers interested. And how does it happen? I have no idea. Right? But could the market find a way to hit all-time highs by the end of the year? Sure. Fed doesn't say anything to disrupt the market. Fed, I mean, they can say whatever they want. They can keep their mouth shut and say nothing about inflation, and it gives the market nothing to the Q&A for Jerome Powell, and he could ignore everything. He could go and push like a play button on a tape recorder, and give nobody anything. But the Fed's going to cut. It's 95, 96% priced in. Probability is really high. We still have PCE on Friday. Obviously, I'm curious what that is, but we had muted reaction from CPI, right? CPI was higher, but the market was already at a low, and it ripped up like $7 or $8 on the SPY that next day. PPI was another warming up inflation, going lower. But the argument is like, well, based on CPI and PPI, what's actually extracted for that to make the core PCE is not as really bad as everyone thinks. Well, if our core PCE number is at 2.8 and it comes in 2.9, that's still freaking higher, you know? So inflation's going the wrong direction. It's pretty simple to see. So a cut going into the end of the year looks like we're going to have a pause or have some type of reality in 2025. The market's already adjusted this too. The market was expecting, another 100 basis points in cuts for 2025. I think the market's going to get lucky to see maybe 25 to 50 basis points in cuts for 2025. And the way it's lining up in the Fed Watch tool would be a potential March and July would be the two cuts. So if we make a cut here, so we cut December, pause, cut in March, pause, cut in July, and then we see what that gets us. So if we can get through the first half of the year kind of unscathed, I would think the second half of the year is going to be a bit more difficult and challenging because then the cuts are done, And if something breaks, I mean, sure, the Fed can cut more, and that's always in their toolkit. Like, oh my gosh, we need to fix something. We need to put a backstop in. This has been the one time that I can remember in my career that the Fed hasn't had to break something in order to enact their policy. They've been really lucky. And, inflation hasn't broke the market, hasn't broken the U.S. economy. We're certainly getting this bifurcated market where it feels like, Main Street is still feeling the higher highs in inflation and this just persistence in inflation. And then Wall Street's just celebrating all-time highs like nothing could go wrong. So, if Main Street feels more of it, there's either layoffs. So one thing you want to watch for is, let me see here, residential construction job numbers. If I can get a data point here, I'm going to try to find this I don't know if the Fed has this on their website, but residential construction job numbers, if they start to go down, that's usually another undefeated recession indicator, and they have topped out. They are starting to decrease. So residential construction job numbers are trending lower over the last three months. Does it get worse? I don't know, but something else is on my radar. All right, that's enough of the outlook. Am I talking out of my butt here? Does this make sense? I think we're going to struggle to go double digits the upside before we see a deeper correction. I would say, like I said, give me like a 5 to 10% downside correction. And I would say that would check the box to say that my projection was right. We'd see some type of correction that's meaningful first before we get any type of ups. And look, if we get a correction first, I'm going to be the first one lined up to say, okay, I'm ready to buy more. And then I'll be targeting something like that as an upside target. But if we just keep going and going and going and going, I don't think we get here before we have some type of hiccup. Okay, so just my thoughts. All right, let's go top down here. So on the day, S&P's up 0.43%, Nasdaq up nearly 1%. The Qs continue to outperform. We have some interesting add-ins for next year. MicroStrategy's getting added into the QQQ. I would say most people in this room, talk gold, talk Bitcoin, understand where it's going. They've seen the price appreciate like crazy, have some type of appreciation or investment in it. This is going to be interesting to see in 2025, even if you never want Bitcoin, right? If you're Peter Schiff and you never want Bitcoin, but Peter Schiff has investments in the QQQ, you are going to be in Bitcoin because MicroStrategy getting added in is essentially like having allocation to Bitcoin. So we'll see, but it just makes things interesting. All I said last week when I read that was this is going to make the Qs more volatile. If we see a 40, 50, 60% correction of Bitcoin, which, usually traders have been experiencing 60 to 80% pullbacks in Bitcoin, we'll see what happens. But I would say your new benchmarks going into 2025 is going to be the price of the S&P, the price of the Nasdaq, the price of Bitcoin. That becomes like these really interesting benchmarks to say, how's my portfolio doing based on these three things? And also, that could be a really easy way. If you want to throw in gold, that's a pretty good portfolio if you think about it. If you did 25% SPY, Qs, GLD, and IBIT, I mean, it's an aggressive portfolio because you're fully invested, but you can trade options in all of those. You could protect your portfolio with option trades. I mean, as far as simplicity goes, that's a pretty powerful combo there. So I don't know, kicking that around for some simplicity moving forward. All right, Russell's been underperforming. We're still up on the day, 0.82%. The Dow's come back briefly, but Dow's pulling back into some decent EMA levels. IWM has pulled back towards the 50. This is another one that I'm still pseudo interested in. I don't think I'm good at the 50, but if we came back down to the 100, I'd probably start looking maybe another upside push to see if the Russell can get up there. The problem with the Russell 2000 is that most of these stocks are unprofitable. So I probably won't necessarily trade the IWM, but I'd probably trade something along the lines like this one just doesn't want to pull back. This is the small cap growth. So the top 200 growth in Russell is just freaking killing it right now. I want to pull back on this one, obviously. And then IWX, this is performing a lot like RSP. We just have consistent down days. How many candles is that in a row? Obviously, it looks pretty nasty. We have 10 trading days in a row to the downside on the top 200 value. This whole notion of value versus growth, I mean, value continues to underperform. And I know some, macro investors like to have a value allocation, but it just feels incredibly frustrating to allocate to value and just see it do nothing. The best thing you might get out of value would be you're not going down much further and you're going to somehow have some dividends. That's about the only thing I could see. If value continues to underperform or be flat, you're just going to throw money at something that's doing nothing. You might throw money at something that doesn't go down, right? But it may not go up. So the idea that, growth goes down and value goes up, that might not be the case. It means that if growth goes down, value goes down less, right? So I don't really buy into the idea that we got to be in value. Now, I don't mind having some like energy exposure. I think energy is also a good non-correlated asset to have in the portfolio. If we see, the whole market sideways or stalling, energy is also something that performs pretty well. Industrials, materials could also step up their game. VIX up a little bit today, 2.5%. SVXY took some profit on that last week. The dollar index, keep watching these levels we've been mentioning, right? This high, this low, range bound in the dollar. I don't think the dollar is going to stop going up. So there's only one spot that I would say it's either we form a top in this yellow box, okay, or we form a top up here. So here's just an outlook. We have a low to high on the dollar. I could see this being range bound, but look at this on a weekly time frame. Is there anything about this wave right here that looks like we have to go down? Not really. If this is a wave 1 right here, and this is a pullback, this wave 3 could be all the way up back towards the 2022 highs. So I'm just cautious. Like, I don't know what this looks like with the dollar. If it's hurting multinationals, if it's hurting growth overall with the dollar getting too strong, the milkshake theory, all that stuff happens over and over again. But my point is, if the dollar breaks above this level, which is around 109.50 or so, if we clear that hurdle, there's nothing to stop this thing until the 114 handle. So this will make Forex trading very disruptive. If we see, the Eurozone versus the dollar, Euro dollar hitting like 95 cents again, if the pound goes back down into the, 120 handle or lower, if Aussie and Aussie dollar, New Zealand dollar head lower to fresh like multi-year lows, if the dollar CAD, which I'm long dollar CAD right now, that trade's actually doing pretty well. Dollar CAD is up to 142 and change. I've been filled on a couple of these positions. My position's been, I threw another 5,000 units at this. So my stacked orders are doing pretty well. I still have stacked orders at 43. I'm trying to get to 44 and change. So I'm just going to build this whole position up. Okay. So dollar index, on the daily time frame, I'm just watching this area closely. This 108 high has been hit. This level low is around 105.50. 105.50 is my line in the sand. If the market can break below 105.50, then sure, maybe this is a range and this wants to come back down to range lows, and I would take some shorts on the dollar that way. Okay. But based on this structure right here, there's a lot of support. And if all this market does is just range here and builds and accumulates, I could see the dollar going higher. Like, what alternative do we have right now? What other currencies look good? I mean, the US market is leading everything. Global flows going to the US. The dollar's been one of the strongest currencies the last several months. You know, it's ever since that trap we had in September, it's been all dollar strength. You know, nobody knows what China's going to do, so the Aussie, New Zealand have been struggling. Eurozone, I mean, we're talking about, you know, lots of countries in the Eurozone are struggling. France is struggling. Germany's struggling. I mean, you could have a Eurozone recession that can't be good, right? Eurozone's cutting rates. Bank of England is Thursday with rate decisions. They're not supposed to cut. They're supposed to pause at 4.75. But UK is kind of on its own little island since Brexit, you know? So just saying, I don't really know what would be a better looking currency than the dollar. Now, staying range bound is totally kind of appreciated as a forex trader because it means there's levels of supply and demand that we can mess around with. But a bigger move to the upside, I would not want to be fading the dollar if this thing's going higher. I wouldn't even want to fade it at this level. I would say I would be interested in a topping pattern, but I don't know. It's a hard one. And honestly, like I'd rather trade stocks and options than trying to fight, you know, a potential like fundamental and momentum based trend on currency pairs that all of a sudden they're missing pivots. There's no retracement. You know, everything you're looking for balance and equilibrium isn't there. And we start disrupting like major, you know, decade long highs and lows or 20-year highs and lows or all-time highs and lows. That's a really, really challenging Forex environment, you know? So just be open-minded, you know, don't be stuck. Don't be stubborn because the market might do some stupid stuff. Okay. Oil. We still keep bouncing off this like $67 support. We're not necessarily cracking like $71, $72. You know, this is another sign of inflation. If oil gets to $75, you know, inflation numbers are just going to start reading higher. There's no denying that. But if we stay really, really stuck and really, really stuck, we're just going to have to make a decision. So I don't know what oil wants to do. I think it's vulnerable to the downside, but you know, you have a lot of forces. I mean, OPEC can push back hard, right? But if OPEC and Saudi Arabia are coming to a disagreement where OPEC wants, you know, less oil and Saudi Arabia wants more, US wants more, US is playing the inflation game by keeping, you know, high amounts of supply in the market. And I don't know, it's weird to see that Saudi Arabia and the US could be on the same page. And I'm not sure who's more powerful. If Saudi Arabia plus the US are on the same side and then you fight against OPEC, who wins? I don't know. So anything I'm doing in oil is to find risk. But it's interesting, like, okay, oil hasn't done anything, but look at dollar CAD. Still going higher. Had a strong enough dollar and a weak enough CAD that it's going higher. Nat gas, I'm not doing anything with right now. Gold, same story. I still want to see some pullbacks. I like the 25 to 2400 zone. We may or may not see it. I don't know. This little rejection we saw last week, it just to me means more chop. But if we get some gold flows, one thing that is happening in the background is all these central banks that are bidding on gold. It took a break. You know, it's been now at least a couple of months since we put in that top. This was around the election, right? That thing pivoted right around the election. You know, China's been a big spot buyer of gold. If we see, you know, gold price oscillating, they can still load up on more and then see this thing rip to higher highs. I think gold is going to maintain bid at some point. So whether it's, you know, now it just gets bid up and we break these highs at 2,800 and go to 3,000, or if we have this A, B, C, D pullback, we come into this 25, 2,400 zone, I'm going to buy some more gold in there. Silver, still one of my favorite technical trades on the metal side. I'm trying to take silver up to $35, $36. Bitcoin, like I said, we're creeping up to symmetry. This isn't going to be perfect, but don't be surprised, like I said, within like 107 to maybe 110. If I'm going to give myself a little bit more flexibility, I'd say 115. But if we hit that like 110 to 115 zone, I'm expecting some type of pullback. Okay. And it doesn't have to be like, oh my gosh, a crash market. It's like, no, it just has to come back in and find where the buyers are sitting. So if we stretch up to symmetry and we start to see some, it'd be this, like, structure has to break. Going higher, higher, higher doesn't mean I want to just force a short trade. It means draw a trend line out here and price does its thing, pauses, maybe puts in a little bit of a topping candle and then doesn't get higher. And then when it breaks this trend line, then we start to pull back a little bit. I'm more interested in that. Like, I want to buy some, you know, give me some moving average pullbacks, give me some dynamic support, find me some structure and balance, and I'll buy some more Bitcoin. If it keeps going higher, I still have exposure. I'll enjoy the melt up like everybody else. But I don't know, I mean, I'd like to buy it, but I want to get a pullback. Okay. So spot price, Bitcoin, I'm in BITO. I still have some shares. More than likely on BITO, if we get back to this high, okay, if we get to that high on BITO, I'm taking profit on my shares, and I'll take that profit again and park that into IBIT and FBTC, just because it's a better correlator to me than Bitcoin. The only thing that BITO has for it is I could trade options on this one early, so I did, and I made some good profit on that. Also, this one has a pretty crazy dividend, which is also why the price sucks. Like, this doesn't look like Bitcoin because they have a 50% dividend, which is insane. Coinbase MicroStrategy, MicroStrategy is up. I thought about actually throwing in $1,000, but we gap. I had a chart alarm last night go off at 105 on Bitcoin. I'm like, well, there goes my MicroStrategy, and so we're already up, 4% on the day. It's up, I don't know. I'm gonna wait. I could be wrong. I could wait for a pullback. I might not ever get it. Who cares? I'll trade my income trades. I looked at somebody this weekend that was just talking about, oh, just make like $1,000 a week on basically a wheel strategy with MicroStrategy. Sure, but you're going to take at least $40,000 and put it on the line every single week. So if you're comfortable with that type of risk, then take the big swing. But I'm not. So I'll wait. I was interested in owning MicroStrategy in the 200s. I could allocate the 20K cash. Right now, allocating 40K, that's a big jump. So I'm going to say no to like heavy amounts of ownership. I'll just take my my income plays. Coinbase still looking fine. Ethereum, I like Ethereum. EETH is the ETF that I play. I have some ownership of EETH. I also have some credit spreads and debit spreads on this one. This is another ETF, ETHA. There's not a lot of data on this one like there is on EETH, but keep an eye on it. Copper might be building a base in here. If we have some, lows, let's say around $4, we're making lower highs right now. Copper might be building into some type of support, and I'd be looking for some type of like bullish pattern to emerge, and then maybe resume an uptrend or a channel high. I don't know. There's no reason to rush into it. I think if we build a low on copper, it's in the low fours. Okay. Japanese yen. This will be a trade for 2025. If the Japanese yen comes down to this level, this is 6J, which is the Japanese yen futures. I'm going long Japanese yen. I will try to get some futures contracts out as far as I can, probably do debit spreads only. I don't want the risk of assignment. But this is another thing. Look, everybody shrugged this one off when we had that August 5th bottom. This could be another potential disruptor to the great story of the U.S. stock market and everything going up. Somehow, the Japanese yen with all the leverage, all the carry, if there's another component to this carry trade unraveling, just watching the 6J. So Japanese yen futures will be on the radar for 2025. I got the chart alarm set near those lows again. I know some like pretty smart investors, good at what they do. Obviously, they're trading bigger picture here, but they're already long the Japanese yen. They're eating it right now, and they're getting stuffed on carry trades or negative swap, which is not fun. It probably feels a little bit like Michael Burry felt in The Big Short. I know it's Christian Bale, but you watch the movie, it's like the sitting on a trade for 1 or 2 years feels like garbage, especially when you're just getting gouged by the market every single day. So, but eventually, if it does pay off, it could be very asymmetric. So that's always a good trade to go after if you got the patience for it. EWJ, that's one of my positions I'm trading on the Nikkei. Nikkei has done nothing since that July to August top to bottom. I'm trying to get some I don't know. I think the Japanese yen could be in a good position to actually see the Nikkei go higher. It only took, what, 35 years to do it, 1989 to 2024. Just a 34-year drawdown, no big deal. Okay. ARGT, this is Argentina. Look at this thing rip into the upside today. Another one that there's so many stocks that look just like this. I can't buy these highs. I won't buy these highs. I need a pullback. So I'll wait. In fact, this weekend, I nerded out and actually built an alert system where if I've got a 2150, 100, 150, a 200 moving average, 144 actually, that I'll get a chart alarm. So, and I've got them on every stock. So everything in the S&P 500, everything in the Nasdaq. And so as I go into 2025, I'll pick and choose, which ones I want to obviously allocate to. But I just want a bunch of alerts to say, hey, I've got some prices pulling back to levels I think are interesting. This is Brazil. That was getting beat up a little bit on the commodity side. Mag 7, Apple just off the highs. Amazon just off the highs. Actually, we poked highs today on Amazon, but faded. Google continues just to shred on the notion. I'm assuming this is on the notion of quantum computing. Meta pausing at the highs. Microsoft doing okay. I need this to stay above 435. This one actually expires this week. I think Microsoft's going to be fine. Let me see what my profit is right now. Microsoft right here. The 430 by 435. It's up 210 bucks. I think my max profit on this one, let me double check what I paid. 265. My max profit's 235. I think I was going to take profit. Let me see what I can take profit on. So 475. So I can get an extra 25 cents this week if I just do nothing. Okay. Now, I'm not saying that the market's going to crash. I'm not saying that at all. But in the event that it does, I'm gonna have to take this to the final hour on Friday, and to make sure that Microsoft doesn't drop $10. Like Microsoft can absolutely drop $10 if something fishy happens this week. So come on, let me try to get 475. All right, that's gonna pen. I'm gonna cancel that. I'm gonna keep an eye on this one. So this trade's in the Pulver alerts. It's looking good. It's outside the expected move. I might not have to do anything to manage it, but if I go from today into tomorrow, right before the Fed, I'm curious what the price is. And again, I know a lot of this is going to be like if you're in the options market, there's probably a lot of volatility in IV calculations going on based on the Fed. We might see some really like sticky option chains if you're looking for time decay, especially. And this is a bull call spread, so it looks good, but I don't know. I mean, I'll see. I might if I don't get a chance to manage it, I'd say this 475 or better. I'm going to manage that profit because that would be most of my protected gains. So 4.75 by 5. I mean, I'm getting 95% of my max profit if I protected at 475. So I think, let me take a look at this one again. 1, 2, close. I mean, can I get 480 for this? It didn't fill, but I'll try. Can I get 475 for it? I'm going to let that marinate for the day. See if I can close this one out for 475. So the 430 by 435, those are all fine. So this one for 475. Close. All right, I'm going to put a pending order there to close out my Microsoft at 475. There we go. So 430 to 435, close 475. There it is. Okay, so this is just a pending order. It may not fill, but I would assume that if it's not filling right now, it'll probably fill after Wednesday. As long as we're above 435 by Wednesday, then this one's probably going to fill. So hopefully it feels like today or tomorrow, and have to worry about the potential risk of the Fed. And I'll take 95% of the profit any day, especially when my profit is capped to the upside. All right, putting in these orders real quick. All right, Microsoft 430, 435, close 475, pending. And that one also has ratio spreads 350 by 345 and the 340 by 330. Those are naked puts. So anyway, looking good on some income there, but I want to try to get most of that profit out of that 430 by 435 by this week. It closes on Friday regardless. I'm just trying to either get 95% of the profit this week or whatever. I'll just let it expire for full credit by Friday. So that's my line in the sand for Microsoft. And Netflix 921. I'd love to buy some Netflix on a pullback. I just don't know if we're going to get one. This is ripped up enough. You know, we stretched a long ways away from that 200 moving average. So NVIDIA, the reason I've called the top on NVIDIA at that 155 mark is for the same reason. We've got a long bar count plus a distance away. Netflix is also a pretty decent stretch. So we've stretched away by about 26%. That's a lot. We also have a bar count back here in October 2023, which should be in the high twos right now. 290 bars. So where am I interested in Netflix? Well, if we pull back to the 21 or the 50, probably the 50 period to start and then target like $1,000. I think we can get to $1,000. I do wonder on Netflix though, if we get to 1,000, do we see a stock split? It's possible. I'm hoping we get a pullback before we run into 1,000. If it just keeps going up to 1,000, honestly, Microsoft just filled for 475. Good. All right. So I'll find that trade. That's going to get updated in the Pulver alerts. So BITO, Microsoft, and yep, those are all filling for profit. That's good. That's one less risk for this week. Closing out for 475. We did the 14 call, $5 debit for 13 credit, and it was the 430 by 435, 265, closing out for 475. Writing it down. All right, Netflix, a pullback would be great. Hopefully we get one. NVIDIA, fading lower. I actually might have some assignment coming on NVIDIA. I have a ratio spread here, a 132 by 130. If I do take the assignment, I'll take 100 shares with a break even of 125. I will flip that in a heartbeat for hopefully, I would say $4 to $5 plus in credit. Let me see what that's looking like right now. NVIDIA. Where are we at? So my 138 by 137, that's a credit spread out to December 27th. There's still some time in this one. I haven't had any assignment. I don't have any shares right now in all of my trades. I also have a 75 by 55. Those are ratio spreads. I sold those during the August sell-off. But this 132 by 130 this Friday, I mean, we're not below the 130, so there's no risk of assignment. But if we get below 130, I would take the shares. I would very quickly probably just throw out like a 2-week covered call, try to get like $3, $4, $5 and just repair it and turn what would be, like this losing credit spread for, 50 cents or 45 cents. I collected, what is that, 48 cents? So I need to make up 48 cents, and I could do that by turning a profit of, $400 to $500. That's easy. So anyway, if I take some assignment on NVIDIA, that's totally fine. But the goal is, if NVIDIA is coming back, here's where I'm interested in buying. The 144, the 200 moving average. So if I take some assignment, I'm trying to lower my cost basis as quickly as I can down to like the 115 to 110 zone and see if we'll get a bounce. And look, if I'm doing repair trades in JD, Alibaba, Baidu, I'm pretty confident I can do that in NVIDIA too. I think NVIDIA's hated a little bit less than those China stocks. Okay, Tesla, whatever, dude. Tesla is insane. We ripped through all-time highs. I don't know. I do wonder how this like Department of Government efficiency translates into Tesla trading. I know, unfortunately, like investors don't treat this stock like it's just Tesla. They treat it like it's everything that Elon Musk touches, for better, for worse. So here we are, stretched away by 45% from the 200 moving average. I don't know how many times in history we've ever had that much of a stretch away move. But right there is 39% when this market basically topped out in late 2021. Here's another one where we sharply pulled back. We were about 45. I mean, it's right there. It is right there. So I'm just going to wait, and I might be old fashioned by waiting, but I think I'm not chasing this stupid thing. Like, that is a ridiculous stock to be buying now. So I won't. I do have some levels in. I want to trade some options on it, but you got to give me a pullback. Okay, Berkshire Hathaway. I do have a chart alarm set at this low. I'm gonna move this thing up to 445. 445. And I'd be interested in some Berkshire Hathaway. Again, nothing more than the 200 moving average. If we pull back to it between the 144 and the 200, I probably start establishing some longs on Berkshire. Even if it goes like this, right? This could be a good looking pattern here. Slightly higher highs, slightly lower lows. Get some exposure down at these levels, broadening pattern, get back to the midpoint or get back to the highs. There's some good upside there. So I don't mind that at all. I think that's a good trade. But I'll wait and see if we get that level hit. Bonds versus yields. Okay, this 10-year yield continues to make me nervous. We saw with the CPI numbers and PPI numbers last week, plus we have PC this week. Watch this level. If this thing breaks above 4.5, the Fed is probably leading us into a reality check at some point, and it's not going to be good. Okay, 5%. We already saw the crippling of 5% on the U.S. 10-year yield. It's potentially a repeat. So I'm hoping that's not the case. I'm hoping with 100 basis points of cuts by the Fed that the market doesn't just run away. And to be determined. I don't know, but this is a huge concern going into 2025. In addition to the 10-year, and the 3-month, which right now is officially disinverted. So, all right, we officially have it disinverted 10 and 3, 10-year 3-month. As I put here, borrowed time. So this for what, 40 years has been an undefeated recession indicator. Goes back to 1982. That's 42 years ago. Every time this thing has had a disinversion, we've had a recession, usually within 12 months. So at some point, the deepest and longest and most sustained inverted yield curve, and we're coming back out of it. I don't know how that's a good sign. I could be wrong. For the first time in 40 years, maybe I'm wrong. But I don't think this is a good thing. So we're officially disinverted on the 10 and the 2-year and the 10 and the 3-month. Godspeed, everybody. We'll see what happens. Okay, China stocks, probably still more of the same, just waiting. There will be a bigger stimulus announcement or a bigger official plan announcement in March of 2025. So we'll see what happens on China. I'm still, I'm in it because everyone hates it, and I'm in it with a lot of option trades. So, it's managed risk, but still it's frustrating to see that big rip in September. HSI is just kind of hanging out. We had that huge squeeze for year to date. I mean, this is kind of nuts, but I want to say year to date. Where did we start? I got to go in here for the weekly time frame. The 8th, the 2nd. Okay, so we started here. Okay. Somebody had said I think China is actually outperforming the S&P, and they were at one point. They were up 35% before that September top, and now they're back up to around 15.5%. So, maybe it's outperforming the Dow, but it's not performing the S&P and the Nasdaq right now. So we'll see. You can still look at the structure here. There's still a pretty decent channel. So even if this is trying to find a way to build, like a little reversal pattern, and we get another nudge higher, I don't know. I'm looking at this as a potential double bottom, though. Double bottom, back to the highs. If we get a bullish pattern to somehow break above this 22,000 mark, China's got a lot of upside potential. I just don't know if anybody cares. Everyone just wants to be in U.S. stocks right now. So anyway, all right. Any other currencies you want me to take a look at? I pretty much just did top-down stocks. Currency-wise, it's really all about the dollar. I'd say that's the one basket I'm focused on the most. I don't really have a lot of trades. I'll give you my full positions in currencies right now. So Aussie CAD, oops. And I'm not really planning on doing a bunch of active trading in currencies. So the positions that I have in are established. I'm going to keep them, maintain them. Aussie CAD, I'm long. Aussie Swiss, I'm long. Aussie New Zealand, I took a buy trade on that last week, I believe. I took a buy trade on the 200 moving average. Aussie dollar, I'm long. CAD Swiss, I'm long. No CAD yen, no Swiss yen. Euro Aussie, no trade. Euro CAD, no trade. Euro pound, I'm currently long. Euro New Zealand, Euro yen, no trade. Euro dollar, no trade. Pound Aussie, pound CAD, pound Swiss. Oops, that's another one here. Euro Swiss. Pound Swiss long. Pound dollar, I closed out last week for a small loss. New Zealand CAD, I'm long. New Zealand Swiss, I'm long. Dollar CAD, I'm long. Dollar Swiss, I'm long. Okay, this is my entire currency trade. So my entire portfolio, this is my positioning. A lot of these are not, hey Chris, where's your stop loss? They're just positions. I'm building these. I'm holding these. I believe these are the directions that I'll get right over the next, few months, or maybe the next 3 months, 6 months. Most of these are also offerings of positive swap, so I'm getting paid on the broker every single day, and that's fine. It's not why I take the trade, but it doesn't hurt to have the broker pay every day. So, I mean, of the 28 major currencies, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think that's right. That's my exposure. What do you think happened with the dollar CAD? Nothing. I mean, the BOC cut last week by 50 basis points. So who cares about the Fed tomorrow on Wednesday? The Fed's cutting down to 4.25. The CAD's already down to 3.25. So it's still positive swap. And the Canadian economy is way worse for wear than the U.S. economy. So I'm still long. And look at the technicals, man. The thing's been a multi-year breakout, and it broke out of a 2-year range. I think it's going up to a measure move at 4,500. You got also like 2016 to 2020 highs at 4,600. So between 4,500, 4,600, I'm long dollar CAD. So if the Fed does anything to disrupt that, it's going to be like an interrupter thing. But I think the trend's already established. I'm taking that thing up to 4,500. Okay. All right. That's it. I'm going to wrap it up there. Thanks for being with me today. We'll see you tomorrow. Thanks. Bye.